Less than 2 weeks from the US elections, and we've seen some massive moves in the dollar, yields, crypto, and even the Mexican peso has gotten slammed. We're going to have a lot less liquidity next week, and we have a UK budget that's going to be released next week. And we have so many earnings on top of it all. So what are we going to make of it? Well, we're going to talk about it in this week's Week Ahead video. My name is Blake Morrow with Forex Analytics, and thanks for tuning in to the Week Ahead video. And we're going to get started with a couple of things, but I really actually want to talk about the election. And this is obviously a very contentious subject for a lot of people, but I got to give you an analog on what to look for and kind of what I'm thinking right now. Because obviously, you know, the polls that suggest that there's a 50-50 chance, or within a margin of error, that it could be a Trump or it could be a Harris win. But if you look at the betting odds, and I'm just going to take you to Real Clear Politics here, and let me move myself. You'll see that we have the odds of Trump winning are quite high right now, and you can see how it's notched up in the recent week, and this is playing a part in the markets and liquidity. Now, as far as the reaction goes, and that's what I care most about as a trader, I care about how the market's going to react in this type of situation. The analog that I'm going to use is the 2016 analog, and this is the euro dollar. If you're not familiar with, if you weren't trading during the 2016 period, this is what I'd be thinking. Because right now we have a situation where we have President Trump and Vice President Harris, and they're up 50-50 odds, kind of like Hillary Clinton and Trump at that time. And you can see this is the 8th, 9th. Well, actually, it says the 9th because the move really started like midnight, if you will, or early in the morning on the 9th, because the election day was the 8th. And you can see how we saw this massive move. And that move really was because at first the polls looked like Hillary Clinton was going to win. And we saw the dollar weaken, just like what you would expect if Vice President Harris was in the lead. But then, as they were counting ballots, it looked like there was a turn. And at that turn, we started to see the dollar strengthen. And then eventually, when Trump was announced that he would be the winner of the election. Now, obviously, there was a contention there, just like they're probably contesting of that election back in 2016, just like there would be in this election. So if you think about that, look at what happened with the euro. Everybody is expecting if Trump wins, the dollar should strengthen and the euro should drop towards 105, maybe one or parity. Depends if he has if it's a red wave of congressmen and women across the country. And the fact of the matter is, you look at what happened in the euro in 2016. We went from basically, we spiked up above 112, and we eventually dropped, within about a week, we dropped down to 105, 106, almost the same prices that we're at right now. Because if you think where we're at right now, we're at 108. Markets are expecting maybe to 105, maybe down to parity on a Trump win. Then you would have the same type of reaction. Now, obviously, if it's a Harris win, next thing you know, you'd probably have the euro that would trade up towards 114, 115 in today's day. So I want you guys to think about the reaction and what could happen, and you have to think about like things like this, and you can see it from that night of, you got the false breakout in the euro, and then it slammed down, and then once we broke down, that false breakout led to a breakdown. That's exactly what happened, and I would assume in the current environment. Let's go over to the current charts. Let me just let me reset this. You have a situation like this, and I'm gonna just fast forward us like a week and a half later. Let's say we get a little bit of a recovery, and the euro stabilizes. Let's just say it's around 109 ahead of the elections, and I'm totally guessing here, and this is for obvious reasons. I've just got to guess, and I got to give you guys some idea of what I think might happen. If it looks like Harris is in the lead, we would see a rally in the euro, and then if then it looks like Trump is coming back in the polls, we would see a slam down right back through support again, right? just like we saw in 2016. The flip side is, we could have Trump looks like he's in the lead, and next thing you know, you get a Harris win, and then it reverses, it breaks through resistance. And then what happens is then you get a contested election, and then perhaps the dollar starts to strengthen as there's risk aversion. We see the euro go down anyway. Those are just some initial ideas, and I'll probably be giving you that exact same scenario going into next week, and the next week's a week ahead video. But that's the way I want you guys to be thinking, is think 2016. Go study the price action there, and I think you're going to see a lot of similarities to what we have, or what we may have in this upcoming election. But that's not the only thing that's happening in a week and a half. Before we even get there, there's so many other things that are happening. Like I said, there's a lot of earnings. We have a UK budget. We have non-farm payroll this next week. But we're seeing a lot of moves that are happening and taking place even ahead of the election. We talked about last week how the US dollar Mexican peso would make it back up towards 20, and I thought it would break 20.05, which it did by literally a couple of pips, and for a very brief moment in time. So, but the fact of the matter is, you can see that the market is getting a little bit nervous, because if Trump is the next president, we're going to have Trump 2.0, as they're calling it. The Mexican peso is likely to go a lot higher. I've read a lot of analysis on the Mexican peso this week, and analysts are looking for large volatility, and I think that realistically a move towards 21 or 22 is quite possible on a Trump victory. So you think about how's the market pre-positioning for this, and you can actually see the dollar Mexican peso maybe even make a move outside of this triangle. As we discussed last week in the week ahead video, you could possibly see it make a move outside of that triangle, before the election. As shorts, obviously, when you look at this chart, shorts are starting to get nervous, right? You got Trump leading in the betting polls. Anybody who's long Mexican pesos, that means they're expecting this. Over time, they're getting worried, and they're starting to close out some of their shorts. So, there are trades that are developing like this all over the place. Now, before I get into what's going to happen this next week, I want to talk to you about just a couple of things before we go into like the calendar of events. And I'm going to go through the calendar rather quickly, highlight some of the key events, and then we're obviously going to cover some of the pairs, and then we're going to go into all the other markets like the S&P, what's happening in the bond market, what happened with the yields this week. I want to talk about all of that. But before I do that, I need to mention two things. First thing is, this video is chaptered. So especially a couple hours after it's been released, if you look through the bottom, you can scroll through, find the topics that are most important for you. Number two, we are going to have a massive amount of volatility. If you look at, I think I have the VIX here. You look at volatility. Volatility is staying elevated. As traders, we love volatility. And the best way to take advantage of volatility is to actually take advantage of the trader funding program. So if you don't know about the trader funding program, let me just talk to you guys about it. The trader funding program is a one-step assessment where you take an assessment, you have to make 10% without losing more than 6% on a drawdown basis. That means that it's a high watermark. If you make 1%, you can't lose more than 6% from your high watermark. So your 6% moves up until you make 10%, then you pass the assessment. If you pass the assessment with unlimited time, you can access one of these larger accounts, anywhere from a $25,000 account all the way to $1 million account. Now, the reason why I'm mentioning this is because you have less than, I'm filming on a Friday, you have less than basically 4 or 5 days to take advantage of a 20% discount from your assessment. Now, it's over, the discount is over as of November 1st. But the best times to be taking advantage of an assessment or the trader funding program, where you're trying to pass an assessment to access this larger amount of capital, where you get to keep up to 90% of the profits and have none of the risk, well, you want to do it during periods of volatility. And in this election that is up and coming, you have you're going to have a massive amount of volatility. And when you join the trader funding program, you actually get involved inside of the Forex analytics community. You have an app, you have ideas, you actually have a community where you get to talk to traders all day long, like myself, other traders, other analysts from Forex analytics, and see what they have to say and what they're talking about, and jump into these threads and get dig deep into what traders are talking about inside of the charts and why they're looking at certain levels. Look, there's no better place to be is in a community that's supporting what you're doing when you're going through an assessment like this. And we're going through a period of volatility where things our chat rooms, this is a chat room, this chat room is going to be absolutely bonkers going into the election and after the election. So take advantage of the trader funding program. It's a wonderful program, and it's great for a lot of traders. Have found it very, very useful and beneficial to them. And because A, they didn't want to risk their own money, or B, they just didn't have the capital to trade. Now they do. So anyway, take advantage of that. Let's get into what's happening this next week. Now remember, you can follow along on Forex Analytics. You can follow along in your calendar here and just go through all the different things that we're going to be covering. It's to the left or to the right, of the Live Squawk feed. By the way, we were just having this conversation a little earlier, how great this Live Squawk feed is to get caught up on what has happened throughout the course of the day, especially if you were asleep and you wanted to find out what happened overnight. Go through the Live Squawk feed. It's a very easy way to cut through what is actually happening in the markets in real time. So next week, all right, like I said, we have some earnings. By the way, some of the earnings that are coming up, and let me just mention a few companies. So October 29th, we have Google. We also have AMD. Oh, look at that inverted head and shoulder pattern in development in Google. We have AMD. We have McDonald's. Why is McDonald's a big deal? Well, there's this big E. coli scare, and McDonald's has gotten smacked as a result. So we got McDonald's on October 29th. October 30th, we have Microsoft, Meta, Caterpillar. Now, Microsoft being one of the largest companies in the world, I think this is a good, barometer when you start looking at something like this to try to figure out what the future, direction of the stock market's going to be, is probably paying attention to, this, consolidation in Microsoft, because do we have, some sort of longer term head and shoulder pattern developing, or are we actually going to get a bullish move outside of this triangle? Well, I think a lot of that's going to be told after earnings. Again, Microsoft is on October 30th. October 31st, we have Apple, Amazon, MasterCard, which tells you all sorts of things. But, Apple, the electric company, the utilities company, I'm just kidding. I joke a lot about it, but Apple, like so many of us pay Apple on a day-to-day, on a consistent basis, that it's almost like a utility company at this point. But watch Apple. I mean, this is a big barometer of and a tell of like retail spending, and how consumers are taking on new technology that Apple continues to put out. I mean, we got a nice bullish wedge developing here in Apple. A lot of signs in the market. Okay, so we have. Just want to let you guys know. We're seeing a little bit of a sell-off in crypto right now, and I'm going to just take you over to this really fast. I am filming on a Friday. I just want to show you what's happening in crypto and why. There is a headline that just came out. Federal investigators probe cryptocurrency firm Tether Treasury. Justice Department looking at Tether, and that comes from the Wall Street Journal. So it's causing a little bit of a ruckus in the markets on Friday. Speaking of which, let's continue on what could be moving the markets for the remainder of this next week, or coming up this next week. So first and foremost, we have the Japanese snap elections, for the LDP party. Now, I'm going to tell you this. I've been trading the dollar yen, and I was trading it on the short side the last couple of weeks as we were moving into this 150 range. When we blasted above 152, I took my shorts off. So I know it sounds funny, but I actually took my short position off, and I took a loss there. We had this massive move in yields, and then the market's pretty nervous about the Ashiba, and if he's going to be able to form a coalition. And if he can't, after this weekend's snap elections, then what we could see is we could see another prime minister come in, and one that might maybe have something more to say with the Bank of Japan. And the BOJ is meeting this week, by the way. We'll talk a little bit about that here in a few minutes. But anyway, the yen should be on everybody's radar come Sunday evening, because we could get a gap higher or lower in the market based on the election results. All right, continuing on throughout the course of the week. On Tuesday, we have house price index in the U.S. We have U.S. JOLTS data, consumer confidence, because it's a non-farm payroll week. So I think it's important. Let's just take a real quick look at the dollar index. If you look at the dollar index, it stopped at a major trend line. This is going all the way back to 2022. Right now, this is I want to stop here and talk a little bit about the dollar index, because I think the dollar index is setting up really great from a trading perspective, especially post elections, because as you can see here, if you can see where how far the dollar has recovered. If the dollar actually breaks out post election, meaning Trump wins, the dollar gets some upside pressure, we could really see the dollar power higher and break out towards 106 and beyond. Obviously, with a Harris win, the direction may be opposite. My hope is, and I know I've mentioned this on our live shows, if you don't come to our live shows every day, they're the F.A.C.E show or the Flow show. The Flow show is in European hours, hosted by Ryan Littlestone and K-Man. And then the F.A.C.E show is where you're going to find myself and other team members there. Ryan and K-Man, they both come too. But the thing I've been talking about this week is what I hope happens. And, not a strategy, just what I'm hoping happens ahead of the elections, is we see the dollar index consolidate around these levels, and then gives us indication what it wants to do following the election. That's what I hope happens. I hope we don't get some sort of breakout ahead of the election, which could happen. But you can see the dollar index is stalled right at that trend line. It's near the 618 retracement of this entire move lower, and we're in an ascending channel. So you can see how the ascending channel on Friday, that's today as I'm speaking, this is holding really well. So that means a break below 103.95 would probably allow for a little bit of a pullback ahead of the US elections. I think the pullbacks are going to be fairly minor ahead of the elections, but I still think there could be a pullback nonetheless. So just keep that in mind as we're going through what we're going through this week. So there's your dollar index, and we have a lot of data coming out this week, especially with non-farm. Now, Tuesday night we have Australian CPI. I do want to take you into the Aussie dollar, because what I've been looking at with the Aussie is we are now getting close to the 618 retracement. Let's take this, and we're going to draw a couple of things here. I'm actually going to take this descending trend line on a market up like this. And by the way, if you don't know what I'm doing here, well, that means you probably don't use Forex analytics. And if you want to see the chart that I have up here, it's basically that descending channel. And you can see that we're very much respecting that. And that's the way we've been looking at it all week. And it's not just the Aussie, the Kiwis doing it, the Kiwis doing it, the dollar Swiss. So there's a lot of dollar pairs that are actually acting in the same fashion. But you can see we are approaching the 618 retracement. I think this is going to be a pretty big level for the Aussie dollar. Now, in order for the Aussie to take this downside pressure off, we're going to have to get back above that channel resistance. But until then, it looks like we are going down towards that 618 retracement. And I think that's where we're ultimately heading. And again, we have CPI Tuesday night or Wednesday morning in Australia. Now, on Wednesday, we have a few things. We have the Euro CPI is going to be coming out, the Eurozone CPI. We have the UK budget. Now, the budget, I want to talk a little bit about this because, obviously I have some team members that are in the UK with Ryan and K-Man specifically, and they've been talking about the labor budget quite a bit. And if you guys don't know, you're not familiar with what they do, go to forexanalytics.com. You see here where it says webinars. Register right here. It's a free show. They'll get you up to speed every single trading session. It's a great show for you guys to get up to speed every single day on what's happening in all around the globe, but they do focus a lot on some of these European currencies. So you have the Labor Party, and it's their first budget, right? So a lot of people are gripping and waiting for some tax hikes that might be coming. I forget what the number is. It's like, what was it, 40 billion sterling tax hikes possibly, which is obviously fiscal tightening. And that would open the door in a situation like that. That opens the door for the Bank of England to be more dovish. So everybody's going to be watching the UK budget release, which will be on Wednesday. One of the other things I wanted to mention as we're going through all this is just remember, as we get closer to the US elections, liquidity is going to become poorer and poorer and worse and worse. So that means that moves can just kind of explode out of nowhere, and you'll be like, oh, whoa, what happened? And that will happen a lot over the course of the next several trading days. So just keep that in mind. Also, on Wednesday, getting past the UK budget, like I said, we have the Eurozone CPI, we have US GDP, ADP, non-farm. So we have economic data that's coming out of the US. We already looked at the US dollar. We looked at the US dollar, Japanese yen. So you've got very good looks on that. Wednesday night, I do need to talk about this because it's Wednesday night or Thursday morning. We have we have the BOJ, which again, I want to just state that one of the issues that the yen has right now is that we have this election that's happening over the weekend. Once we get past that, we're going to be, talking about what the BOJ may or may not do. Now, they are not expected to move on rates, but the question is with with the BOJ is because of the recent weakness that we've seen in the yen. A lot of people were so bullish the yen. Bullish the yen means what? That they're expecting the yen to strengthen and for the dollar yen to move down. So many people, if you listen to the week ahead video, you listen every week, remember when it was down here, a lot of people that never even trade the yen. They never even talk about the yen. They were super bullish the yen down at those levels. And I warned everybody down there that it seems like when you have people that normally aren't currency people, they start talking about currency, chances are we're going to see the opposite move. And we have. Now, the good news is the yen has weakened substantially, and we've seen the dollar yen get up towards, I always thought we'd get to 150 to 152. Well, we're here. But this has opened the door for the BOJ to be more hawkish if they want to, and maybe they could, if they feel the need with inflation trying to steady around the 2% target, they could give some indications that they are ready to raise rates sooner rather than later. Now, the market's not expecting them to raise rates for the remainder of the year, but if the BOJ wants to position themselves that way, they could. They are also going to be releasing their quarterly outlook projections, and so we have to pay really close attention to the press conference, what Ueda has to say, and if he sounds a little bit more hawkish, and we might push up the time frame, the goalposts, if you will, for the next hike, we could see the yen really strengthen from here. Now, once again, this weakness of the yen has kind of given the BOJ, in my opinion, it's given them an opportunity to really, if they really want to raise rates sooner rather than later, it's given that opportunity, because even if they did and the dollar yen fell, to the mid 140s, it's still a better price than it was, just several weeks back. So I think the BOJ is going to be really important. It is basically Wednesday night, my time, but it'll be Thursday morning, in Japan. Moving right along, we have Swiss CPI, which is a big deal for Switzerland. And then Friday we have non-farm payroll and ISM. It's the ISM manufacturing data is happening after. It's happening after the jobs report, but more importantly, and I think the thing that we need to be paying most attention to with the the ISM is that we're not getting the services data or the manufacturing data ahead of the jobs report on Friday. So that's something to adhere to. All right, moving right along. I wanted to take a look at gold. Obviously, we talked about last week how it's holding up well near the all-time highs, and guess what? It's still doing that now. It's consolidating right at the all-time highs. Well, we're going to go to the S&P here in a second because the S&P is approaching intraday support, which we'll talk about in just a moment. But you can see that gold continues to rally, and it continues to hold above 2690, 2685. Remember, we talked about this last week, what a big level that was, and how our targets are above 2800. We just worked off overbought conditions, so this all seems quite logical, if you ask me. The next thing that we need to look for is we need to look at the, let's take a look at the S&P, because the S&P has come off, and it's actually approaching. This is why it's important, and this is why I just got an alarm a moment ago, is we have this ascending trend line that looks something like this that we're coming into. And this is something that we probably need to pay pretty close attention to into next week. Now, as you guys can see, we're in this ascending channel in the S&P. We're not far off of all-time highs, but we are seeing a bit of a reversal. We're on support right now. I don't necessarily know if I'd want to be bearish right at this moment, but it sure does feel like we do want to slip to the lower end of the channel, which, by the way, is all the way down around 54.50. Now, do I think we're going down there ahead of the election? That's a tough call, and that's a tough trade to take, especially when you have, former President Trump possibly going to have another term. Everybody believes stocks are going to go up as a result. So why would you want to sell your stocks if that is what you believe? And I'll just say it again, when you see the betting markets look like this, it's going to be hard pressed to get too many bears coming out at this moment in time. But that doesn't mean we can't see a bit of a correction, maybe back down to this 56.80. All right, continuing on. I know I kind of skipped. I didn't want to go directly to the S&P, but we talked about copper this last week, and copper, it just continued to hold around support. This is really critical support. Let me get rid of this fast. All right, you can see how copper has held support. It's got the 50 DMA, and it's got the 200 DMA right below that. Now, China has given back, or is consolidating, and that's worth noting. But I guess what's really worth noting is if China did start to sell off, copper might come under pressure too. One of the big big movers this week was the bond market. Now, we talked about the 10-year being in a bear flag pattern. Okay, we talked about it over the last 2 weeks. We have a bear flag pattern. Yes, that's still happening. But if you take a look at the ZBs, and we've been discussing these over the last. We did last week. We were talking about what really critical support this was here at this trend line. We continue to break down. Yields continue to go up this week, and that's something that, in my opinion, is really, really worth noting. Is that, and we could still have this inverted head and shoulder pattern. Don't think that that's ruled out. It's not until you come down and break back below 113. But given the fact that the 30-year continues to drift lower, yields continue to go up, that is definitely worth noting. Like I said, I talked about the S&Ps, and we did manage to talk about the Bitcoin market. Now, I know Bitcoin is it's coming under a little bit of pressure right now, but we do have to imagine that if Bitcoin gets back above 70,000, that is going to be an indication that the market is really buying into the idea that Trump is really got the election in the bag. Which, again, the polls say one thing. This is the betting markets, and I know your gut, and you are going to feel a certain way. And here's the thing I want to say about the elections, because I said this on our live F.A.C.E show today. As we approach these elections, it is so vitally important to remove yourself and your opinions and what you think is going to happen from what you're doing in the markets. Don't don't get a bias, don't have a bias, don't attach to it, don't trade it. Trade what you see and how the market reacts. I've done it the other way around, and it doesn't work. It might work, but there's a higher probability of you failing if you're going to trade based on how you feel versus what you see. Look, I have my opinions just like everybody else, who I think is going to win and who I think, what is going to happen. But I don't let it, infiltrate what I'm seeing in the markets. And that is the most important thing, in my opinion, that you have to do as a trader for the next couple of weeks. All right, at this point, I do want to talk about all the trade setups from the previous week. Remember, here on the week ahead video, I like to talk about what are the trade setups from for this next week, and review what I talked about last week. I'll give you 3, and we review 3. So let's start with US dollar Mexican peso. Well, I said, hey, long above 120.05. We went, and I'm not even exaggerating here. We literally went above that level for a very short period of time this week. 2 different times. We just probed there. We were above 205 for maybe less than 15-20 minutes. You might have tried to trade it. You might have taken a loss. If you're still in it, you're basically flat. I mean, you may be down a few pips. I'm going to call that one a break even. I personally have been long dollar mex, and I actually sold my dollar mex this morning on this rally today because I just want to reduce positions ahead of the election. So I'm just going to call this one a flat because it's basically barely spent any time above 20.05. But I still think you should keep it on your radar. And I do think there is a risk that that the dollar Mexican peso might actually break out this next week if the polling starts to lean more towards a Trump second presidency. Bitcoin. I said get long Bitcoin and add above 70. Well, we never got above 70, but if you look at Bitcoin, obviously that what just happened now is like, wait a second. They're investigating Tether. So Bitcoin, let's go over to the daily chart. On Sunday or on the weekend, we were basically right here. So yeah, if you bought Bitcoin and you were going to add above 70, well, you never added above 70. So I'm going to say that one didn't work out. You took a loss there, yeah, because it never broke back above 70. And if you bought it like right on Sunday, you'd be down a little bit. So yeah, that one didn't work. So one, can't really count it against us. The other one, it didn't work. Now on the short, on the third one, the third trade, looking to add shorts below 149. Well, it never did break down back below 149. We never broke below this channel. We actually broke to the upside. So that one didn't take place. Although I have been short dollar yen, I did take it off and I did take a loss. So basically on the trades from last week, one of them didn't work out. The other 2 never really transpired. Although, some of you may or may not have been in the dollar yen. And let me mention this. Things are going to get really messy. And I know I said this already. It's going to get really messy this next week. So you got to be ultra careful. All right, let me give you 3 trade setups from this week. So the euro. I believe you can play the euro to the long side. Last week we were looking for the euro to possibly bounce. This week I actually think the euro dollar can bounce. And the reason why is you saw the major trendline support that the dollar index is on, resistance, excuse me. The euro is basically holding that same support level. And I think if you buy the euro here at 108, I think you can spin out of it at a little bit higher prices, maybe towards the 200 DMA sometime this next week, which would be 108.70. And it's not asking a lot. You're not asking a lot out of the market. However, I do think that the euro you could be following. One of the charts, and this comes from my colleague K-Man. One of the charts that let me see here. One of the charts that that K-Man has talked about. And Ryan, they've been talking about this on the Flow show. Let's go this way. I'll find it for you this way, is the Euro 2-year versus the US 2-year. And what you can see is we are seeing the Euro and this is the differentials between the European 2 years and the US 2 years. You can see that it's very, very, very similar to the euro dollar, and the price action is, you can see how it's almost mimicking to a T, right? So you don't, as K-Man said even this morning, it's like, you don't trade it tick for tick. No, you don't. Use it for more of a trend indicator. So in other words, if the European 2-year over a US 2-year really starts to break higher, then that would suggest that the euro is probably ready to go as well. So keep the euro on the radar. I believe this is the one that, for me, I think the euro, buying it around 208, we might have an inverted head and shoulder pattern. I think we can play that for a little bit of a recovery ahead of the US elections. All right, looking ahead, or going to the next one. Now, this is going to be an if-then, right? Then do that, right? I do like the dollar yen. I still like it on the short side, even though I got stopped out of I took my short off for a loss. If we see a potential leadership change in Japan following this weekend, the chances are is the US dollar Japanese yen is going to trade up towards 153.50 to maybe 154. Anywhere in this area, I am looking for a short. If that happens over the weekend, that would probably mean relative strength is divergent as well, and that's how I want to play it. So I'm going to play a gap up. I want to play the short side next week, because I do want to be short some dollar yen or some dollars ahead of the election. And if this gives me that opportunity to do so, that's what I'm going to be doing. Third trade setup is silver. And I like silver. I like the breakout, and I like the fact that it's trying to hold this breakout point. So now with silver, let me just share with you that 132.50 I believe is really critical support, which is going to be basically here, right? 132.50, 132.40. It's also a 50% retracement. You can see it here. It's a 50% retracement right here, and what I think is happening at the moment is something that looks like this. So if given the opportunity down towards 132.50, I am looking for a long off of those levels. Now, with all that being said, next week's going to be really crazy with all the data that's happening. With the liquidity is going to get kind of poor. You're going to see things moving for no reason as positioning is happening. People are pre-positioning ahead of the elections. Trade carefully this next week. And if you feel that this video has been really beneficial for you to prepare for your next week in trading, give me a thumbs up, give the team a thumbs up, and thank them for getting this information out to you over the weekend. So I want to say my name is Blake Morrow with Forex Analytics. I want to thank you so much for spending your most valuable asset with me, which is your time. So thank you for that. I will see you on the Monday morning F.A.C.E show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.